good afternoon, and thank you for being with us on another. Let me just get the music down. All right, thank you for being with us. We always appreciate having you guys with us on another wonderful winning Wednesday. It's about to be the end of the day for us over here. If you're in the East Coast, beautiful day, hot day where we are, but still a beautiful day. And thanks for being with us. I'm gonna let Lee join in. I think he's joined in. Lee, can you hear us?
I can hear you.
Perfect. All right. Good to have you. Anything you want to say before we start?
No, I just want to tell everyone when it's hot, we sometimes wish it was cold. When it's cold, we wish that it was hot.
Yeah.
I love the old expression that says, enjoy the present. No, today is a gift. That's why they call it the present. And I was just outside. I met with a fabulous CPA slash tax strategist. And one of the things that I would advise any small business owner to do is ensure that they have a tax strategy as they're going with their business, right? And the reason why you need to have a tax strategy is because you need to position your assets in a specific way if you're going to be able to basically keep as much as you earn. I haven't said it that way before, but keeping as much as you earn. That's the different way that I'm going to say it now. You want to be able to keep as much as you earn.
That's true. That's true. I like that. And I guess it goes with it with if you are going to be an entrepreneur, run your own business. Part of the reason why you do it also is because you are looking to build some type of generational wealth, and you want to make sure that your business is best suited and that you have access to resources or to people who will help you make sure that as you work hard, you can save more of that money and make sure that you are doing the right things to be able to grow the business versus working hard and then paying all of it all out. So it's more of a strategy thing, I believe.
Well, you got to ask yourself at the end of the day, why are we doing this?
Mm.
Right? And at the end of the day, if you have an answer to that question completely, why are we doing this? Then you'll be able to answer that question as to, well, why do I want to protect why I am doing this? Right? So it's an interesting conversation where you're going to take the lead because you've taken all of the tests, you've done all of the many things that need to be done in order to be able to work with small business owners as you did for our family, you can do for their family to ensure that if there is something that happens that you aren't expecting, and we don't have to exaggerate the point and be like, oh, you're doing something with respect to your dying, right? We
Mhm.
don't have to go to that extreme end of the channel, right? But what happens if you are outside gardening and you pick up a heavy box and you pull your back? You're not able to walk, which means that you can't actually go to work anymore, right? Do you have access to a disability policy, or do you have access to a line of capital that you can actually leverage in order to be able to cover you in that time?
Mhm.
So let's just jump into it and have a conversation really quickly about What is cash value life insurance? Help me to understand, well, what is cash value life insurance?
Well, a cash value life insurance is a policy that you can take out, and this policy helps you with two major things. One, it has a death benefit, and two, it has a living benefit. So, what that just means for you is that you are both preparing for after you pass on. However, you are also preparing for while you're living. Your living benefit, you can utilize it right now as you are still alive. And then the death benefit is what will help your dependents or whoever is your beneficiaries once you pass away.
Yeah, but there is a lot of information that is out there and in the channel. Let's dive into the difference between, let's say, a whole life policy and an IUL. What are your recommendations based on those two pieces of two different products?
Those are two different products, but at the end of the day, every product really is going to be utilized by someone depending on their situation. I would never say there's one product that's better than the other. It all really depends on you as an individual. What is it that you're looking for? They are both permanent life insurance policies. At the end of the day, then what comes down to which one you pick will be dependent on your specific situation. We'll sit down and go through what are your desires, what are you looking to do. Then we can tailor make a policy according to your needs. And one of the things that I know is out there concerning these two, whether whole life or IUL, a lot of times I hear people asking, well, I can create my own banking system using either one, right? And somewhat I would say that's true. However, if you are looking to do infinite banking as it was created by Nash, then he built this model of infinite banking using a whole life policy. And
Mm,
he was against using an IUL. So you can do whatever you want and call it whatever you want. But if you're going to say you are employing this for infinite banking, then you are going to go the route of a whole life insurance policy. Now, as we are talking about this, I think we're going to get back into the topic for today, where we wanted to explain a little bit about how small business owners can also become their own banking systems. And I say a banking system because you are not fully a bank in that you can do lending and borrowing to other individuals per se. You are not regulated or anything like that. But you can create that same concept. And this concept is really centered around you put money into the system and you have people or you have others or you even have yourself take loans out of that system and continue growing based off of interest earned, which is what banks do. With a bank, I walk into a bank, I put my money in the bank, and the bank gives me what? Let's say 1% per year, right?
hmm.
However, when I walk into the, or when you come into the bank, Lee, and say, I need money, the bank will let you have that money. However, it's going to be at a cost to you, which is the interest. And a lot of times, not a lot of times, all the time, the interest that you are going to be paying is going to be more than what I'm getting as somebody who has saved my money in the bank. If I'm getting 1% and they're charging you, let's say 5%, do the math. That just shows you that's how banks are making their money. right? Now, if you have a desire as a business owner to be in a position where you say, I would like to have my own access to funds that I could tap into whenever I needed some type of assistance, some type of loan. This is where a cash value life insurance comes into play. And what happens in that scenario then is we will sit down and determine what you are looking for, what numbers you are comfortable with, where you are at in your business. And we will structure this policy such that you are going to get those two things. You're going to get the death benefit that's going to be associated with whoever is the owner of this policy. And then you are also going to have access to the cash component. And this cash component is what you're going to be using in the event that you needed some type of loan. You can tap into those funds. All right.
No,
So, mhm.
go ahead. You,
All
you know,
right.
you tapped onto two components, and I want you to do a double click on each of them and
Okay.
explaining that insurance policy has two components. The first component being the cash value component, but then there is a second component called the death benefit, right?
Mm-hmm.
I think it's of value to explain to anyone who may be looking at this as an opportunity to tell them what you do to each of those components when you are designing a policy that adheres to the Nash principles.
Okay. So when you structure this policy, what you are looking to do is you are looking to increase as you pay. Let me back. So every policy you have to pay your premium towards this policy. So the way we structure this policy is that based on the premium amount, we are going to play around with the percentages to enable us to put more money into, depending on the scenario as well, to put more money into what we call paid up additions, which is what's going to help buy you more insurance that's going to go towards the cash value. But in simpler terms, it's just you're going to structure that premium so that a portion of that premium, say 30% goes towards paying for death benefit and 70% goes towards paying for the cash value life insurance. That's just the simplest way to understand it. And based off of that, as you play around with those numbers, those percentages, that's how you are going to grow your cash component based off of the percentage value that you're going to be paying from your premium into this policy. I hope that answers your question.
No, that does answer the question. And what we want to do is explain to others how this structure is structured, why we believe basically when you think about this entire platform that we've created, right? Business Insight and Infinite Banking for small business owners, we structured everything that we're saying and doing around this concept, right? We believe as a business owner, capital or access to capital is the oxygen for your business,
Mm-hmm.
right? Now, if we were to then double click into that and go down to one additional layer, there are two ways that you could have access to capital. I would say that there's a third, but the third way is something that we aren't promoting, which is using personal finances for your business. So there could be the third one, but we're going to leave that one off the table for now. If we're talking about oxygen being the capital for any business, the first way that we know is you have to build up a corporate credit profile using only the EIN number, right? And that's the first way to do it. We talked about that last week. However, this week, we want to have the conversation on the other component that we actually believe is going to be beneficial to the small business owner, and that's having access to a policy, an insurance policy, because we believe having access to that insurance policy, which has a cash value component, is the right thing to do. And I just got one more statement before I hand it back over to you is one, that small business owner, the individual or the partner needs to have coverage should something happen to them. And
Mhm.
that's where the death benefit comes into focus, right?
Yeah.
However, if we are dealing with rainbows and unicorns, as they say, right? We're dealing with rainbows and unicorns, then that means at that particular point in time, that can be an alternative access to capital for the business owner while they are healthy and alive.
Mhm.
And they can tap into the cash value component. One of the things that I see that is also beneficial to that is that they tap into it at an interest rate that is usually lower than what market is today. So we're about, 16 minutes into the call today, but maybe you can just double tap into those other components of how to build and structure out the policy so that it's of value to the policy holder, because you can share our story about how our first policy was crafted. We came in, we said all of the right things. This is what we want to do. And we got a policy that didn't do that. And then the steps that we took to get onto the path where we are today.
Yeah. So one of the things that I really talk a lot about is the importance of ensuring that this policy is structured correctly. There's a lot of information out there. You just need to sift through to determine what is correct and what is not. When we first started our journey, we worked with somebody else and they structured our policies. And I think for the first year or two, we thought, okay, this looks fine. Until we did more studying and I eventually got licensed because I just wanted to really understand how this works. And after that, I got the opportunity to review our policies. And the biggest thing that we noticed was that a lot of the premium that we were paying was going towards a death benefit. And we were very clear when we did this that we were not really concerned a lot about the death benefit. Our concern was more on we wanted to have some type of cash access to that we could use for the businesses, for ourselves, and things of that sort. Now, if your policy is now structured such that a lot of money just goes towards growing the death benefit, which is still great for other people, that means that the growth of the cash value was now minimal, and I wanted these to be the other way around. That's why we ended up creating our own policy or having to do another policy that was now structured to how we wanted it to be. And we went through that process to just ensure that what we were looking for and what we wanted to benefit from this policy is exactly what we got. And now we changed those to now be in a position where the cash component of all our policies is growing more than the death benefit. And, a lot of times people ask how the cash value really gets to even grow, right? And one of the things that a lot of times people miss is that with these policies, you are looking at the compounding effect. Let me give you a little scenario. Today, if I take $1,000 and put it in a savings account, I know that, let's just make assumptions. Put 1,000 in a savings account at 1% interest rate per annual. That just means that if I leave that 1,000 in that account, after 1 year, it would have grown by 1%, right? If I, for whatever reason, on that 1,000 decide I need to pull out $300, I pull out the $300, the balance now in the account is $700. What that means is that now, at some point, once I pulled that amount out, that $300 out, then it means that my interest rate now is going to be based off of $700. Correct? All
Hmm.
right. Now, if you go to when you have this structured or customized cash value life insurance, the way it works is that when you have that cash value within that policy, let's say you have 1,000 available in there. If you take a loan out of $300, your interest that you're going to earn will still be based off of 1,000 versus the balance versus $700. And the reason is, when you pull out or when you do get that loan from the policy, you are in essence getting a loan from the insurance company. And then the insurance company is using your policy as collateral. So you're not really taking that money from yourself. You're getting that money from the insurance company, because the insurance company knows that, oh, Eunice has a policy and that policy has about 1,000. So we can give Eunice $300, knowing that if
Loan.
Eunice was to pass on, we'll be able to pay ourselves that $300 from the policy that she has. So
Mm.
you're taking a loan out, from that loan is financed by the insurance company. And a lot of times that loan tends to be at a lower interest rate. I know, I think about 2 or 3 years, we did another loan from one of our policies, and it was at, was it 4.5%? You would
But
tell
this was
me.
when this was at the point in time where interest rates were at the highest, right?
Yes,
Nine.
yes.
Well, that was just, the federal interest rate. The other terms were, yeah, closer to nine if we had gone a different route.
If we had gone to go for, say, a personal loan from the bank,
Yes.
right, that would have been somewhere north of 9%. Now,
Mhm.
you do that, and once you pull that money, you are able to use that money. And even though you are using that money, as your policy ends that dividend, your dividend is going to be calculated based off of the 1,000 that you have. And now think about it this way: when you have that 1,000, but you're able to utilize 300 on other things, that means that your money is in it, and in essence, it's growing more than one way. It's going to be growing from that compound interest that you're earning. And it also has the potential to grow in another way, because if you take that 300,000 and go put it into another investment, that investment is also now going to be growing. And you can then, use the money likewise. So if there is any other options out there that allow you to grow money two ways like that, I want you to share that information with us so that we can also jump on that.
No, I want them to come on to this program and tell us exactly how they were able to do it, because
How that
I
works.
remember we needed to purchase a car,
Yep.
right? And we went to the car dealership, and, having very good credit, what they consider to be exceptional, they were trying to give us, I don't know, I'm not going to call it whatever it is, but the interest rates were too high, right? Because you see on the advertisement, if you have good credit, you can come here and get this interest rate. And I
Mm,
was trying to determine, well, why was it that we were being charged this inflated interest rate, right? And I came to realize is that they were just trying to jack me around and do all of these different things. And we were looking for a way not to be charged interest, but to pay off the vehicle, right?
Mhm.
And the best way that we realized in hindsight, if we wanted to do that, was through a life insurance policy, because the life insurance policy, we would have been able to take out the $45,000 from the policy, pay off the car, right? However, the cash value component of our policy, and that's something else that has to be stated for the audience, is there's direct recognition and non-direct recognition that we'll touch on in a later policy, well, in another recording,
Yeah.
right? Because there is a difference between them, in my opinion, right? Everybody
Yeah.
has an opinion, and if there's direct recognition and non-direct recognition, right? I have at least a 50% chance of being right, but I also don't have an opportunity to be wrong, because in the end of the day, whether I have a policy that's direct recognition or non-direct recognition, I'm still going to be able to earn on that cash value,
Yeah.
right? Even though I paid for my vehicle, it's paid off 100% completely, I am still earning, right, against the cash value component of the policy.
Yeah.
So, you know,
Well,
go ahead.
I was just gonna say there is so much more that you can really learn about how these policies work, how to structure them, and how best they can really help your business to grow because you have that access to capital or to cash. And what one of the things that I think maybe next week we can talk a little bit about is excuse me, is what are some of these advantages of really having access to this cash? What are some of the advantages that are associated with getting cash from your policy versus from a personal loan or getting a loan? There are differences, right? There are huge differences that really can impact your success. And that's something that we can talk about another time. I think what I really wanted us to sort of talk about today was just that importance of setting up a customized and correct or correctly set up cash value life insurance to allow you as a business owner to have those two components, both a death benefit and access to cash. And as long as this policy has been set right, you can pretty much influence where you want the most growth to be. If you want the most growth to be on your death benefit, then it's structured in that way. If you want the most benefit, the most growth to be on your cash value so that you can have more cash or have more access to more cash, we can also set it up in that manner. And that allows you as a business to have a way in which if you needed cash, you can tap into that living benefit. Anything else
Well,
that I may have not?
one of the other things, and this is probably going to be the last piece of what we talk about, I've also said to the audience that if they have any questions, they can just drop the question into the chat and we'll address it before closing out today.
Mhm.
But one of the things that we have experienced, because we are client zero, right? Everything that we have come here and spoken about on this platform, everything that we have come here and spoken about on this platform are things that we have done ourselves. When you go and look to receive a cash value policy, there is no approval. You don't have to fill out an application and say, well, can I have access to XYZ? You just go and fill out the paperwork, and within a few days, that money is going to be wired into your account, depending upon the insurer that you're using. But
Mhm.
you get immediate access to that cash, and you don't have to bite your fingernails or worry whether or not if someone is going to approve you or not. Tap into that before we close out. And if there are any questions, please do throw them into the chat.
Yeah. So when you are looking for that cash, pretty much what you're filling out is admin's type of documents. What about a, depending also on the insurer, about a page or two. And this is so that the insurance company knows that you're looking for funds and they can keep that paperwork trail. But it's not in any way um, a scrutiny of how's your credit, how are you going to pay me, how much do you have, what income do you have to pay me back, how are you going to pay me, are you going to pay me every 3 months, let's set a payment plan. It's nothing like that. Basically it's just how much do you need. Most of the time we say, you know, depending on, of course, on the insurers as well, you can take up to 90% of the value that's currently there. So if you have that 1,000, you may take out a loan of about maybe 900. Usually, also, you find that once you fill out that paperwork, give it, depending on the insurer, give it 48 hours or so, you may have already received your funds. It is that easy. You're not going to fill out the form and start looking for documentation or financial statements to upload. It doesn't work like that. So you can imagine, as a business owner, that type of flexibility when you have a key person in the organization that the business is owning this policy on, and the amount of money that your business will have access to, you can access that money in the most quickest way and with the less amount of scrutiny and paperwork and all that type of thing. I believe, as a business owner, that is just one of the most amazing products out there that every business owner should be looking into getting.
No, it is not disruptive to your life,
Yeah.
right? And we don't want to pass judgment on people. Some people may only be able to afford a term life policy. And
Yeah.
if all you can afford is a term life policy, I would tell you do that every single day,
Yep.
right? But
Yep.
when it comes to this, it's almost similar. I believe we were having a conversation about a person who was saying, I would rather rent than own a home, right?
Mm-hmm. Mm-hmm.
I would equate a term policy to renting,
Mm-hmm.
right? Versus a cash value life insurance policy to owning a home. And I'll give two examples. Renting, you're going to be paying for shelter, but you will never own, right? So with a term policy, you will never own that term policy unless you are removed from the earth. And the reason why insurance companies are so profitable, I don't have the exact number, but Eunice, how many term policies, I don't know if it's going to be an annual basis, are actually realized for the death benefit? It's a very low
It's
number.
less than 5%. So
Less than
less than
5.
5% of term life policy owners ever get to put in that claim. So you're basically just paying for it and it never gets to be
Which
claimed.
is a good thing. Which is a good
Which
thing.
is
The
a good thing.
policy
Yeah.
holder is still alive
Yeah.
and not dead, right?
Yeah.
So that's a good thing. You only wanted to have insurance should the worst of the worst have happened,
Mhm. Yeah.
right? However, with a term policy, there is no ownership claim to that policy unless you are removed from the earth, unless you die, right? Similar to when you're renting, you don't have ownership to that shelter, whether it's an apartment, single family home, townhouse, etc. You don't own any of it. Whenever you swipe your card or your check, that money is gone forever. You never can get it back. And that's why I equate owning a home to having a cash value life insurance policy, because similar to a home, right, that I own, right, I will be able to tap into that equity at some point in time. And it's just like a cash value life insurance policy, and the fact that I will be able to tap into that policy at some point in time for when I need to.
Mm-hmm.
So that's as simple as I can make it. We are over by 5, and then we also started just a little bit uh behind, but I think it was of value to have had this conversation, bring it together in a more structured way, right? So that we would be able to have full and honest conversations with our audience.
Yeah.
I also changed the QR code at the top of the screen, right? So that if anyone has a question about this that they would want to carry out offline, they can reach out on our VIP Insurers platform to have a conversation with you, so that you can do a deep dive into their situation, so that you can set up the right policy for them and what it is that they're trying to do.
Yeah.
Now, while you were saying that, we may not, I would say the chances that we're going to do this next week is probably going to be slim to none, because we'll be traveling to Africa, and we'll probably put this on pause for 3 weeks. We may just jump on at this point in time to say hi, this is what we're doing, but we're not going to schedule it until I think it's going to be the 14th, right?
Yeah.
So, to our audience, sometimes we got to go away for you to miss us, right? But we
Yeah, that's how we
definitely,
check if we're adding value, right?
absolutely,
Yep.
but we will know, and you will know, that we will soon return, right? In order to continue to share with you, our audience, these nuggets that we have, so that they can set you up, so that at the end of the day, we want everyone to achieve financial freedom, gain access back to, gain access and control over their time, and at the end of the day, choose happiness. So I'm going to be signing off for you to have another wonderful winning Wednesday. And Eunice, you have the last word.
Well, thanks for being with us. Thanks for sticking with us even when we went uh, over by a little while. But we will see you all in about 3 weeks' time. We will pop in, but yeah, I think we'll see you after 3 weeks. So enjoy yourselves, enjoy the rest of your summer, and see you on another wonderful Winning Wednesday soon.